Welcome to Galaxy Brains, the weekly podcast from Galaxy Research. Yo, we're back and we're ready to attack. We thirst for the track, throw dirt on the mat when I scrap like Neo with a mic in my hand. Never lying like Leo, but I'm August, shine like stardust. Every time that I bust, haters all duck. Aw shucks, no trust when you're sovereign with the buck. When Fiat gets deleted, see me backing up the truck. Tip the scales when I rip, telling tales from the crypt. Keep the whales at my hip when I sail on my ship. Flip a couple coins when I chop like Harvey Dent. Or chilling with my boy talking shop with Marty Bent. Every argument, bring the heat to debate. Save the seat with the greats, bring the heat to the tape. In the street with the cape, cause I'm here for the win. The rap is TSA and we're cleared to begin. As always, I'm your host, Alex Thorne, head of firm-wide research at Galaxy Digital. Thank you for listening to Galaxy Brains. We have a great show for you today. Marty Bent from Tales from the Crypt, Rabbit Hole Recap, and 1031 is our guest. I talked with Marty on set at PubKey about Bitcoin mining, and a bunch of other interesting issues. It's a great conversation you won't want to miss. And we'll check in with our good friend Beimnet Abebe from Galaxy Trading, as always, to talk markets. But before we get to all of that, I need to remind you to please refer to the link to the disclaimer in the podcast notes, and note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy Digital or any of its affiliates to buy or sell any securities. I'm excited for this one. As I said, the interview with Marty we did at PubKey NYC, so you'll see a different set there when we roll that, but let's get right into the show. Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, great to have you.
Thanks for having me.
So we've had a little bit of a recovery. You can see over my shoulder here on the block clock from, I guess, a little bit in doldrums, but again, still in the channel. Bitcoin volatility has been like almost at historic lows.
Yep.
It seems like, I mean, I haven't seen a lot of data. What's going on in the markets these days?
I think in crypto, it's just been sort of like a malaise, just as a function of an absence of catalysts, right? You know, we had the Ripple stuff a couple weeks ago, those court cases.
Yeah.
But
ETF stuff was now at this point like almost 2 months ago.
Correct. And so it just kind of feels like a waiting game in crypto. And then, you know, risk markets, you know, more broadly, haven't fared too poorly or too great, to be honest with you. S&P's down, you know, almost 1% today. And, you know, we've had a couple large tech names that have really underperformed. But it doesn't seem like we're on the precipice of like, you know, a big sell-off or anything like that. The real story, you know, that is at least attracted my interest a lot is on the fixed income side.
That's what you said last week. You gave us some of the stuff about the long end of the curve.
So the long end of the curve, you know, we've sustained above 4% on the 30-year for a little bit now. I think 30-year yields are hovering around like 4.18 right now.
So can you break down, just for our audience, what that really tells you, right? I mean, we're talking about long dated issuance, right?
Yes.
So long-term bond, 30-year bonds.
30-year bonds.
Right? Like that's buying U.S. debt that doesn't mature for 30 years, right?
Correct.
So theoretically, if you're very bullish on like long-term U.S. debt, having debt, paying its debt, being a good economy in 30 years, et cetera, right? You could hold that for a long time. You would feel that.
Well,
but so people, when the rates go up, it means there's less demand for it. What exactly is what is this telling you? Is there any, is it a comment? Is it purely structural?
It's a combination of a lot of
a comment on, you know, the United States' 30-year prospects? I mean,
well, I would just treat it as a market like anything else, right? It's just another asset. And so, you know, what moves an asset? It's like buyers and sellers. And I'd tell you that there is an absence of buyers right now, and it's pretty meaningful. And there's an absence of buyers, one, because central banks are pulling back and actually tightening their balance sheets rather than expanding them.
So they're buying less of it.
Yes,
right.
Correct.
Right.
And they're big buyers.
Yeah.
And, you know, I think foreign appetite has waned a little bit as well, just because foreign central banks are doing the same thing. In addition, just functionally, the front end has gotten more attractive. On a relative basis, because, you know, we've jacked up front
rates
end
are
interest
higher,
rates,
yeah,
and you don't have to take duration risk there. And so, and then, you know, I think another element of it is also just uncertainty around inflation, right? Like going out 30 years, there's a high degree of variability to fixed income and inflation expectations, and where inflation realizes over that time. And so, you know, you require a higher term premium, in theory. And so I think the market is just repricing that part of the curve in the context of inflation, which I mean could really start going back up again. I mean that's so the big story this week is you've got CPI on Thursday. Right. And headline CPI is expected to come in the low 3s, and core CPI is expected to come in mid to high 4s, right? But when you look at things like energy markets, right, crude just topped $84 a barrel. Like nat gas has started to pop off, in Europe, as one example. And so there are clearly upside risks to inflation still, particularly in the context of a labor market that's just so tight at 3.5% unemployment.
I was showing this. I said this to somebody, and I was explaining that what I think is a pretty wide consensus that you've articulated plenty, which is that unemployment is good. Like CPI's come down, of course, and go back up, but the idea that the soft landing is possible. Right. And even probably the more likely of the scenario when you look at everything right now. And they were like, yeah, but like you can't use unemployment because like if you look at actual numbers of people searching for jobs, it's worse. And I'm like, so I did that. It's not worse. The labor force participation rate on balance is lower than it has been in a long time. But if you take out the elderly, if you look at 25 to 54s, it's near all-time highs.
Yeah, that participation.
So people are working. I mean,
people are working. Yeah, and the problem is the wages are keeping up, or that there's wage.
Right. So they're working and they're making more money.
Correct.
Wages are going up too.
Yeah.
Yeah. It's just it is interesting.
And though. Unless you have that like come off in some way, like it's going to be tough to tackle inflation.
Right.
And my other point to that is like stocks have come off a little bit, but who's really going to lay off like 10% of their workforce if their stock price is like close
down a couple percent,
or like super close to all-time highs.
Right. I mean, like even like we were talking about there were some big tech names. And equities. Like last Friday was a pretty big sell-off, right?
Yeah.
But it's sell-off from like all-time high.
Yeah.
So it's like down a couple percent.
Yeah.
From all-time high. Yeah.
Right. And
you need more sustained reductions there too.
Right.
And the fear is that if you ever looked at the interest rate chart or the inflation from like the 70s and 80s when Paul Volcker was at the Fed, like they raised them and it came down a little bit and then they thought they were done and then it like spiked back. There were multiple attempts at curbing inflation back then, and that's obviously what the Fed is very weary of and doesn't want to have to do. It's why they're remaining hawkish, right?
Correct. Higher for longer is how they're putting it. And functionally there are things that mean that the inflation number is going to continue to have upside risks because you're losing like really low numbers from a year ago now. Right. And so you're getting, the opposite of base effect. Or, some base effects, basically.
Right.
And so, it makes things very tricky. But I think ultimately, like what the Fed's, left in terms of decisions is, they basically have to stay higher for longer. And the question is like how high?
Yeah.
Right. And so do they hike rates one more time or do they pause?
Feels like they do, right? Or maybe I
think they should.
Well, they hiked last time. So then, maybe they pause again and then hike again?
I mean, the way I think about it is like, what are you really risking? Right.
You can always swoop in and cut. Like,
like why wouldn't you if you're genuinely still worried? And I personally, I'm like, some of these valuations in equities are just still absurd.
They still seem high.
Still absurd. And like some of the valuations in like privates, still crazy. Nobody's really selling their homes. Like home prices have been fine. Where you're seeing weaknesses in things like, used autos, which it's okay.
It's not It's not like the core of the economy. It matters.
Yeah,
but it's
matters, but it's not, it's not the end all if like cars get cheaper.
Right.
And so, I think it's a really weird spot. And the way I think about things is like really, okay, so let's say we're in this kind of economy for the next couple of years. Are terminal rates properly priced? And so the way I think about terminal rates is like, the end state of like what neutral is, for the Fed funds rate. And right now, market-based expectations have that around 3.3%. So that's a 200 basis point cut from like peak terminal rates.
Mm-hmm.
And so, I still struggle with that idea because the U.S. economy looks like it is functioning just fine with 5% interest rates. And like I know we've got these student loan things, coming, et cetera, but I think there's a very feasible scenario where it's like 5% interest rates are just normal. They don't cause anything to like blow up at all.
Which it makes sense. You hear, it's like you had to walk uphill both ways to school when I was a kid. But I hear the same, like, oh, we had to pay like 12, 13%, depending on when your parents or whoever's saying this hypothetical thing to you. They've been high. They've been high in the past, and the economy has functioned.
Yeah.
We just became very used to very low.
I think particularly in the U.S. where folks are just so sheltered from high interest rates with respect to having locked in a lot of fixed rate financing.
Yep.
Like the U.S. in particular can really handle higher for longer.
Right.
Super well.
Yep. All right. Well, we're gonna have to see what happens. It is a little bit of the doldrums of summer.
August for sure.
Yeah. But I know it's gonna be an exciting fall too. But in crypto and in markets,
just give
in
me
the
an
news.
ETF. I'm not asking for much.
Our friend Beimnet Abebe from Galaxy Trading, as always. Thanks for joining Galaxy Brains.
Pleasure.
Welcome to Marty Bent, our guest on Galaxy Brains, on location here in Pubkey, New York. How you doing, Marty?
Doing well. I actually listened to your last episode on the drive up here.
Oh, did you really? Was that with Harry Sudak?
No, not Harry.
With Adam.
Adam.
The chain analysis guy.
Yeah.
He does some weird stuff, dude. They're different than like a normal chain analysis company.
Pig butchering seems pretty scary.
That is wild, dude. They literally, what a mean way of saying it, too. Because they fatten up the pig. That's the idea. Dude, that guy, I always make fun of him and like say he's a spook. I mean, he works in like surveillance. Good dude, though.
I think you did good. You approached the spook question very, very appropriately. Like there's a cypherpunk tinge of Bitcoiners that worry about the chain analysis.
Have to ask the question.
Yeah.
Did you see the thing he said, too, about there are fishing boats off the coast of South America, illegally fishing like rare... The example he used, he said, was like near extinct seahorses. And they also, like, when they come from China to do that fishing, they also bring illegal cargo, which
like
they
fentanyl.
then use the digital yuan to sell. I was like, what?
Yeah, I didn't realize, because you mentioned that they're using the digital yuan off the coast of Ecuador, right?
Yeah.
And I didn't
So he
realize it was
said.
that big.
I know, me neither. And he said people like regular, I was like, are regular people then like circular economy trading with it? And he's like, I don't know, but they're definitely buying and selling with the Chinese fishing boats with it. And I'm like,
What is the digital yuan running on?
I don't really know.
Token or
No. I think I don't know. Yeah. It's not like on Ethereum. I don't know what it's on, but I don't. If that's true, and I believe him, and he also does work for like the U.S. government, like that. Dude, the yuan is like making it into our hemisphere. Like that's like the urgency of solving that situation. If not with Bitcoin, then at least with the dollar. Like get the dollar. I definitely don't want to end up with digital yuan. I'll keep the dollar over that.
When he was describing that, I was having like visions of it's like reverse Triffin's dilemma just playing out in a different era where they're like flooding other markets with yuan in an attempt to make it the reserve currency.
I mean, do you flood it enough and put your goods there, start paying for stuff with it? Like
build a bunch of
that
infrastructure.
can work. Yeah. That's what they did in Africa too with all their money in general, right? They created all this Chinese debt there by building out all that infrastructure, denominating it in, and then having them default. So it's fine. Either you owe us money in yuan or we own the infrastructure. Either way is good for China.
It's the IMF playbook all over again.
So let's talk about you, Marty. I'm a big fan of Marty's podcast, Tales from the Crypt and Rabbit Hole Recap and a lot of the other stuff. Marty's Bent. I've been reading the Bent, I think, for like, can you see when people signed up? Probably you can.
I could probably go back, yeah.
I bet you I've been reading since at least 2018. And I think that it was started before then. When did you start that newsletter?
June of 2017, so it just turned 6.
Yeah, so I was probably maybe a year into it. I had started reading it. I've been reading Marty's podcast newsletter for a long time. Anyway, I say this for our audience who may not know Marty. Marty is a Bitcoin educator. I know you're involved in Bitcoin mining. You're a Bitcoin analyst. You've got something new too. I saw. Is you involved with Cretius on this? What's it called?
Yeah, I'm advising on-ramp.
On-ramp Bitcoin.
Mm-hmm.
Yeah. What is that, by the way? Just I don't even know. But I see that you guys have pretty cool podcast content. I've watched one of them. It was great.
Yeah. So on-ramp is a trust product that allows you to get exposure to Bitcoin, but the custody of the Bitcoin is set up in a multi-institution, multi-sig.
Cool.
With on-ramp, BitGo, and Kingdom Trust. And you have the ability to take Bitcoin in kind. So the idea is that you can get exposure via a vehicle that people are familiar with and then have an on-chain sort of audit of the Bitcoin's actually sitting where users think it is, lines up with the shares, and then when you're ready to take custody of Bitcoin, you can take it in kind and not have a taxable event.
So I really like that because I was thinking about like Fidelity has the 401k thing and like I'm like I would love to
buy Bitcoin and hold it long term in a tax advantaged way. But I'm like not clear yet if when I retire, like, dude, I want the Bitcoin. I don't want you to make me sell it. You know what I mean? And I'm not actually sure if that's possible. And certainly they haven't encountered that yet either. But
no, I mean,
that's
that's
definitely want that.
Thomas and I were talking about that when we just recorded a TFTC episode before this, and we were talking about it in the context of the BlackRock ETF. And I think as Bitcoin educators trying to teach people how to get exposure to the space, which is something we did during COVID on Clubhouse. Like,
that was just like
it
was part education, part support group, part social club. I mean, that was a good time. Yeah.
It was a lot of fun, but like in the context of the BlackRock ETF, a bunch of people are going to ape into this.
Yeah.
And if you read the docs, like only approved partners can take it in kind, which is going to be a very select group of broker dealers. And then you have to get it from the broker dealer, ensure that they're actually going to send you the Bitcoin at the end of the day, which I wouldn't put a high probability on. And so like with the suite of products out there, that's why I think OnRamp's pretty well positioned, because they've set up the custody in a very unique way where there's no unilateral control over the Bitcoin. And then they've written it into the docs that individuals can take the Bitcoin in kind. And with BlackRock, most people are just going to have to sell their shares, take the taxable event, and then buy back.
Right. You have to hope that either Fidelity with its ETF or maybe the others like BlackRock's, that Fidelity could be one of those authorized participants that could actually receive the Bitcoin for you. I just mentioned that because they have the capability to send and receive and hold Bitcoin. That's one of their things. So you have to hope, because again, you don't want to do that. You just want to buy Bitcoin and then have Bitcoin.
Yeah. And then there's other products out there like Unchained's IRA. They have an IRA where you can hold your Bitcoin in a multi-sig and you hold the keys, and so you do have control over that Bitcoin. That's one thing I'm very passionate about. And I think moving forward, we should really be beating the drum as creating this new standard that leverages Bitcoin's native multi-sig properties to offer financial services that people are comfortable with in the incumbent financial world, but say, hey, like there's a new model here with Bitcoin. Like you can give end users like better assurances over custody and control of the Bitcoin at the end of the day.
It's not possible with other financial assets, right? So it is a step function improvement. I've loved everyone even Bitco's an early major multi-sig. All these great people came out of there also that do it, like Jameson and others, right? And then you have Casa and Unchained and OnRamp and Anchor Watch, right? And it's just a great concept, and it's extremely safe. I actually, when I use some multi-sig products for some of my Bitcoin custody, and I just don't keep the backup phrases for those wallets, like, because there's other redundancies, right? I prefer that actually, and rather than keeping I don't like having to write down the seed phrase and know that's a vulnerability now.
Yeah,
it's sitting there.
Well, that's what I think is great about the options that have come to market over the last 5 years, particularly, is like optionality. Like some people are comfortable securing seed phrases, some aren't, and that's what's really exciting right now. Is like these options are becoming available to the market.
This is one thing. I have to look at the entirety of the cryptocurrency markets for the research that I conduct, and one area that's super interesting, that where Bitcoin, one area, certainly not the only one, but where Bitcoin's way advanced, is on security, storage, hardware, right? Because all the other like innovation happening, say in the Ethereum world, is software, basically, right? It's all coding. There's plenty of software development and innovation happening on Bitcoin too, but that's why all the people that get rugged on MetaMask, right? Like the entire concept of the way you do NFTs, if you want to use them in any way, like even as a Twitter profile picture, you basically have to keep it in a hot wallet. And they're just not nearly as advanced with like whether it's multi-sig or collaborative custody or literal block clocks. Like there's just nothing like that out there anywhere but in Bitcoin. There's so much innovation on this side.
And I think it highlights what I would argue is the correct approach from the Bitcoin development community and the industry around it, which I believe wholeheartedly that there's an order of operations that will lead to the inevitable success of these networks. I think I'm pretty confident that Bitcoin is going to win out in the long run. It's because it's focused on this order of operations. You need a distribution of full nodes, a geographic distribution of hash rate. You need these custody products. You need these primitives at the protocol layer that enable sort of robust security. And then on top of that, like recognizing like, okay, you're not going to be able to do everything on chain. Let's build layers on top of it to make everything possible. And I think what's happening with Lightning gets shit on a lot, pardon my language, and has
Totally fine.
for the 5 years since it launched. But I think if you're actually paying attention, the state that it's currently in is a mature state where I think things are going to get really interesting with people being able to integrate Lightning into their stacks.
Yeah, I was I actually just saw. Let's talk about Lightning because I know you're pretty heavy Lightning. We talked about this a couple weeks ago. But as an aside too, I just got the demo on Fedi for the first time. Our friend Harry Sudok is in the beta or something and showed me, and I was like, dude, I need to get in this beta. Absolutely phenomenal, fascinating. It's basically DAOs, what they call DAOs in crypto. It's a decentralized autonomous organization built on multi-sig and shared Lightning channels, and it's incredibly interesting and powerful. Totally beyond, I think, what certainly the normies, the total normies, but then even beyond what the crypto world actually thinks is possible on Bitcoin, it's going to really blow a lot of people away.
Yeah, I mean the scaling potential that Fedimints bring to Bitcoin, and then combining that with Lightning is extremely powerful.
Yeah.
I've had access to the Fedi Alpha for some time, and when we were in Nashville a few weeks ago, Cody Lowe from their team, from the Fedi team, gave a demo, and I tested on mainnet for the first time, and it is like magic.
Yeah, it's so good. It has encrypted chat too, and a bunch of other crazy features. So on Lightning, like, you know, when you say people shit on Lightning, why? What have they been saying? And then,
well,
what do you think the reality is?
I think the criticism is being driven by either pure disingenuous argumentation or impatience. And so, like, similar to Bitcoin, what Bitcoin gets shit on a lot for is like, oh, it's not a store of value. Look at how volatile it is.
Yeah.
Like, look at the concentration of mining pools, whatever it may be. And I think that's just completely asinine. Like, to expect Bitcoin to launch and to become a fully monetized store of value and perfect value transfer network is just like the wrong way to look at this thing. Similar with Lightning, it launched in March of 2018, and everybody expected it to be this robust, usable payments network out of the gate, which is similarly just insane to think that's going to happen.
Yeah.
And so the quote-unquote lack of Lightning adoption since it launched 5 years ago has been used as like a point of criticism from people who are saying this is not working. But if you actually, again, have been paying attention, the development that's gone on with the different implementations, the different development kits, the wallet software, it's finally, I think, reached a point of maturation where we're beginning to see it integrated into very important sectors of the economy. I think what Snowde is doing to help miners pay utility companies and really reduce the final settlement risk and the chargeback risk that utilities companies have is exciting. I mean, for the podcast, like Podcasting 2.0, I've been using that for 2 years now.
Yeah, tell us what that is. You use Fountain app, right? And what is this?
Fountain's one
right
way to use. I use that as my wallet for Rabbit Hole Recap. TFTC, I run it through my own full node, but essentially the idea is, and this is where I think like the Web 3.0 crowd is completely missing the ball, where they're like, we're just going to remake everything in a distributed fashion on these blockchains with tokens and tokenomics, where I think really the signal is combining open source money, Bitcoin, and the layered stack above it with other open source protocols. And so Podcasting 2.0, that open source protocol combination is Lightning, Bitcoin over the Lightning Network, and RSS, which is how podcasts are distributed. So in my RSS feed, what you can do now via Podcasting 2.0, which was created by Adam Curry, who originally he originally created podcasting back in the day with Steve Jobs and a couple others. RSS is essentially just HTML code, and you can put information in their files. And so what he did with Podcasting 2.0 is allow you to put what's called a value block in your RSS feed, and that is a Lightning Network public address. So when I send all my podcast out via RSS feed, I have my Lightning Network public addresses included in each individual theme. And as people listen to the podcast, they can download apps like Fountain, which double as a podcast player, but also has a Lightning wallet embedded in it. And as they listen, they can send me sats, either stream per minute listened or send me a tip in bulk, like right over the Lightning Network. It's truly peer-to-peer, like for TFTC. I run my own Lightning node, and that's the public address in that RSS feed, and people from around the world are listening to the podcast and just sending me Bitcoin straight to my node.
It's crazy. You showed me your maybe it was your fountain. I can't remember. Actually, no, I think it wasn't fountain. You were going into your node.
Wallet
You're going into
connected to my
Zeus.
node. Yeah.
Yeah, and it's just like stream, tons of inbound payments. So, I mean, the other thing here, I was telling somebody about that you showed me this and how interesting this is, and seeing whether we can get in our feed. I don't see why we couldn't.
Oh, you easily could.
Is whether I was like, so he's using it every day, and someone was like, well, is he using it? And I was like, well, look, he's receiving it at a minimum, but that's indicative of many other people using it every day. There's clearly a lot more usage, I think, on Lightning than people think. They also say they look at like the Glassnode chart of like total channels and total capacity of those channels on public channels, and say like, oh, it's only like what, like 9,000 BTC, like that's nothing. It's not like 40 billion TVL in like a DeFi protocol, right? But the thing is like that DeFi TVL is pretty much inert, whereas this is working capital, right? And I remember I asked Jack Mallers once years ago at this point, and I think he said at the time that they were turning over like their entire capital stack like more than once a day. So like the true capacity is significantly more.
Yeah, and I think that's something that Lightning has to deal with. Two things you just mentioned there. One, like lack of activity, people point to, well, it's really driven by the fact that you really don't know how much activity is going on unless you go to each individual. But there's no blockchain. It isn't public in that sense. It's a private, which is like a double-edged sword. It's like hard to know the true activity, but you also get like increased privacy, and, which is, I think, is a massive benefit. And then on top of that, you could do, like, people typically compare Lightning network channel capacity with Bitcoin locked in DeFi.
Yeah.
But like on Lightning, you can do less. You can do more with less. Like, I think River just did some channel management, and they took a bunch of Bitcoin off the Lightning network, and people were freaking out, like, "Oh, people are using it less." Somebody decided to give up, and like Alex Leishman had to come out and be like, "No, we're just doing channel management. We actually don't need this much Bitcoin to do everything we need to do."
Yeah. It is an extremely efficient thing, but it is, I think, one of the other criticisms, and I think this is improving a lot. It's just that it's hard to operate, right? And it isn't. I mean, I run a Lightning node also. I use Umbrel and like for a whole node of mine, and it's not that hard, but it isn't like grandma can set it up easy. And then you combine the channel management issues and liquidity management, which because they're bidirectional payment channels, it's not like always on money, right? You got to like do some management, but with like Voltage and David Marcus's company, the name is escaping, Lightspark, right? Like there's let alone like OpenNode, like there's a lot more like B2B infrastructure that's coming out that makes it a lot easier.
Yeah, DZ as well. Like you can, they are basically setting up software that'll do automatic channel management for you, and that's what actually like I think I agree. Like grandmas aren't going to run Lightning nodes, but I do think I have this thesis that at scale, like individual companies are going to want to run their own nodes. They'll do that by a combination of hosting particular stuff in-house and allocating some functions to companies like Voltage, DZ, Lightspark, Strike, whatever it may be, River. But you'll have like dedicated system admins in your company to manage the node. Like I think that'll be like a specialized job in the future.
Yeah, I think. Do you think that there will be, like, to me, I think people worry about the centralization risk of the complexity, and that a lot of companies will run it, and then, let's say a lot of banks will run it, and then basically like it's just like essentially custodial, and it isn't that terrible. And of course, I don't think that's ideal if that's the majority, but I really think of this also for Bitcoin itself, like. To me, it's about the optionality, right? Like you don't have the option to self-custody large amounts of dollars today, right? Like you will, as long as you always have that option to run your own Lightning channel, run your own node, store your own keys, just like RFK went down the bullet points at Bitcoin 23, right? To me, that's enough. I want to go and educate people to do that, but like I don't think it hurts Bitcoin if a lot of people decide to use custody, as long as the rest of us don't have to if we don't want to.
Yeah, as long as the option's there. And with Lightning, you always have the option to create like a sub-network of private channels.
Right.
And that's always going to exist.
All right, let's go back. I want to go back a little bit, Marty, because you worked at Barstool. I remember you've told a story. I must have heard it on your podcast at some point. I'm assuming that's where I heard the story, about you having given Bitcoin to Dave Portnoy and others. Back in the day, he lost the hardware wallet or something at the time. How did you, First of all, how did you get to Barstool, and how do you go from Barstool to Bitcoin stuff? I've never actually asked you this question, but I'd love to know.
So it's funny, the Bitcoin stuff, the newsletter led me to Barstool. So I'm from Philadelphia, and I graduated high school in 2009, and that was when Barstool Philly started. And so in high school, I was obsessed with Barstool Philly.
Yeah.
And through college, like as they grew, became more obsessed with like Barstool. And then Dave is like sort of an innovator in the digital media landscape.
Oh, yeah.
And so fast forward to 2017, bull market was rearing up. My friends and family group knew me as the Bitcoin guy. I was getting text, emails, calls, like, what the hell is going on? I was like, you know what? I'm going to start this newsletter. If you want to learn about Bitcoin, just sign up to this mailing list. I'll teach you a little bit every day. And so that's how it started. It was like a friends and family like newsletter that I was just trying to educate them. And then I would share the post on Twitter, and the list grew. And that summer, I believe it was like June, it was only like a month after the newsletter launched, I saw Lewis Roberts, who was working at Barstool at the time. He's one of the early employees, tweeting about Bitcoin and crypto. And he was actually telling people to ape in to Ethereum near like the all-time highs in the ETH BTC trade pair. And I DM'd him. I was like, hey, big Barstool fan. Like, I don't think you should be telling stories to ape into this at this particular time in the market. Like, here's proof that I know what I'm talking about. Here's my newsletter. So that led to him reaching out to me to meet up. We actually met in Flatiron at the Smith like a week later. And he was like, all right, what's going on here? And I sort of gave him my thesis on Bitcoin and what I was seeing in the space. And after that conversation, he was like, you need to start a podcast. And I was like, I literally was like, I don't know how to do that. Can you help me? He was like, yeah. And so like Lou was pivotal in my journey to where I am today. And so like, I didn't actually officially work at Barstool until November of that year. But in that summer leading up to the launch of the podcast in August, I would go to the Barstool office and just sit in the corner with Lou and talk about Bitcoin and start thinking about how we were going to launch the podcast. And so we launched the podcast in August of 2017, and I would essentially just sneak into the Barstool offices late at night, record, pull in Bitcoin developers.
Wow.
And then we posted, and at that time I was unemployed. I was between jobs, and I was like just married, desperate. I was like, hey, like, can I actually get a job here to like make some money on top of like what I'm doing on the media side of things? And so like I joined on their podcast ad sales team in November. And did that. I was only there, Dave would say, like a cup of coffee. I was there for like 6 months, and then I joined Great American Mining. But yeah, it was really weird coalescence of events, and luckily me
really
just having the balls to DM Lou and be like, hey, you shouldn't be giving this advice, like led to the podcast. And
I talk about this a lot, like just shooting your shot, like is an important part in life. People they think, oh no, the person's too busy or too famous or whatever, or I'm too nervous. Like, you just really got to shoot your shot. We got a guy in the room right now who shot his shot, sitting behind Secretary Janet Yellen one time, Bitcoin sign guy over here with us in the studio. Anyway, dude, I wanted to ask you too about mining. That's a good transition because I know you've been working in mining for a long time. The halving is what, 8-9 months away. Mm-hmm. Mining industry today is significantly different than the mining industry at the last halving. There's a lot of public companies. There's a ton of money. There's the hash rate. I don't know. We could look at the chart since 2020. It's probably tripled, at least, maybe more.
That's like 375 exahash rate.
Yeah, and you know the like Brandon Bailey and Amanda and the mining team Sim at Galaxy are predicting possibly 500 exahash by the end of the year. They think base maybe 450 though. That's still a significant amount of increase. Like, how is the mining? What does mining look like to you today as an industry? And like, how are miners preparing for the halving? Are they concerned? What is the issue? Like, how are they thinking about it?
Yeah, so I think we learned a lot of lessons during the last cycle, particularly around like ASIC collateralized debt and treasury management near when things are ripping. Like Thomas and I were talking about it. Like, I think there was some poor treasury management in the depths of the bear market last year where people could have scalped some Bitcoin off the top to bolster their balance sheets. But fast forward to today, like I think coming off the back end of this bear market, like a lot of miners are learning about debt management, capital allocation. I think that's really been driven home in the last 2 years. Like when you deploy capital, whether it be to build out infrastructure or acquire ASICs, is extremely important. So trying to time the markets and the prices of those particular assets is front of mind for everybody now, as opposed to fall, winter 2021, where everybody was aping into like futures orders for XPs at extremely elevated prices.
Right.
Of course, when those XPs were delivered, there was like a recalibration of price and some credits offered, but a lot of people overpaid. And so right now, 9 months before the halving, I think different miners are obviously in different positions. The ones that have older generation models with relatively elevated electricity costs, let's say 6, 7, 8 cents, are really thinking hard about, all right, what are we going to do? Because when the halving comes and that subsidy gets cut in half, like we're not going to be profitable.
Right.
And so I think there's a mixture of things going on in the industry now. You have that archetype of a miner trying to figure out how they're going to prepare. Are they going to dump their ASICs, try to time the market and get a good ASIC price locked in, build some cash, and redeploy at some point in the future? There's probably going to be a lot of M&A going on here.
I think consolidation between some miners.
Yeah, definitely. I think between now and the end of the year, we'll begin to see the M&A headlines become more prominent. And then you have another archetype of miner of like people who learn their lessons and have been deploying capital, buying ASICs over the last 6 months when they're extremely depressed. We've had energy prices coming down, so locking in longer-term PPAs at more favorable energy prices. And so I think there is a certain subsect of the industry that is setting themselves up pretty well to benefit. And
Nice.
they, right now, for miners, like if your electricity cost is above 5 cents, let's say, I would say only buy top-of-the-line ASICs and plug them in, especially if you're hosting.
Yeah. Do you think, let me ask a couple of Bitcoin questions I'd love to hear just your stance on. What about the security budget of Bitcoin? Is this a concern long term?
I don't think so.
How does it get solved, or is there something to solve?
I don't think there's anything to solve. I think we're just people like to LARP about it and point at activity on the chain and say this is a problem, we got to fix it, when you're really applying Bitcoin's historical usage to the future, which I think is going to look completely different. And I have a thesis that you can apply Jevons paradox to a Bitcoin UTXO, which is Jevons paradox typically applied to oil and gas is the paradox is the more efficient you become with a resource, the more you use of it. And it's a paradox because you'd assume if you become more efficient with a resource, you'd use less of it. But as oil and gas industry has proven, as we figured out how to do things with different blends of oil, like we use more of it. And this is a good thing. It's made society much more productive and increased our quality of life. I think the same paradox can be applied to a UTXO. So as you enable things like Taproot, SegWit, the Lightning Network, Fedimints, like these add utility to what you can do with a UTXO, and they make them more efficient, the optionality that you have with particular UTXOs. And so as these things mature and as the macro tailwinds sort of push people into Bitcoin, like I think I'm not worried about the quote unquote security budget at all. I think a UTXO is going to be useful in many different ways, and that demand is just going to be pretty evident.
What about the ordinals and inscriptions? I know a lot of miners, if they don't really like it, they're at least benignly supportive because it has increased fees significantly. There is, even today, I was just looking, I mean, like, it looks like this is just one wallet estimation, but I'm looking at 13 sats per VByte for the next block. I mean, we were at 1 sat per VByte for like over a year, you recall. Like, I mean, that's better fees. Like, so we know why miners would be fine with it. They're fine with anybody paying fees, right? But what do you think in general about inscriptions and ordinals?
Yeah. I mean, I was reading a report earlier, like first 6 months of the year, fee revenue was like 8,700 Bitcoin, where same period last year was like 2,200.
Right.
So it's a significant increase in revenue as a miner. I don't mind it. When it comes to ordinals and inscriptions, I think it's an ephemeral phase that'll get priced out by true economic activity. Thomas and I just talked about this, but it's attempting to monetize memes.
Totally.
Which is against like the whole concept of a meme. A meme
That's
is
true.
something that's supposed to be like a public good you can point out and everybody intuitively understands.
You're not actually supposed to know who even created or owned it. Actually, the best memes are just like, I don't know, it's a picture that somebody sent me.
Yeah,
that's an interesting point. I hadn't thought of it like that.
I think it's a big clout chasing.
Yeah,
endeavor.
and it's in such interesting conflict with what has been, certainly, and I still think what is the core ethos for Bitcoin, which is that, and the project's goal, which is to build global decentralized non-sovereign money, right?
Yeah.
And then it's like we're going to do other stuff on it. I mean, I personally think it's fine. I don't think it's a threat.
Yeah.
I think you're right. I think the market, if the Bitcoiners don't want it, then it'll eventually not be profitable to do anything with it.
Yeah.
I will say I do like that there's a little bit more like weird experimentation that's happening from it. I like that type of weird stuff. I own one inscription, and it's my own avatar that I inscribed at 10,888 after I talked with Casey Rodomar back in February. But I'm not really interested in trading digital collectibles personally. But
No.
It's a big market though outside of Bitcoin. Even though it's pretty down significantly right now, it's actually still quite big.
No, I agree, and again, I was telling Thomas maybe I'm just like the curmudgeon in the room. But it's completely uninteresting to me.
It's totally fine. And okay, we should wrap in a minute. I think too. You got to get uptown, and I think we've been going. How long have we been going for? 30 minutes, maybe.
I got 15.
Feels like okay, cool. So what are you most excited for about Bitcoin right now? I mean, maybe it's something we've already talked about, but if not, I mean, what are you like? Actually, you know what? Let me ask you about this, because this is one of the things I'm most excited about is the park, the commons, the pub key, right? We're in pub key. We're upstairs in pub key, by the way. So our audience, I think many may have been to pub key or seen downstairs the actual bar and restaurant. But I love these new physical community spaces that people are setting up. And it's not charity, right? These are functioning businesses that bring a lot of people together.
As Thomas likes to call them, Bitcoin third places. No, I think they're incredibly useful. I mean, we were down at the park 2 weeks ago, whatever it was, and like like the energy when you're in a room, and focused with people who are on the front lines with you. Like, how are we going to solve this massive problem of making sure Bitcoin succeeds and that as many people as possible can use it? And I think the quality of conversation that happens at these third places is significantly better than what you'll see in mediums like Twitter or Reddit, whatever it may be. And each has its own little twist to how they do it. Like, pub key is very distinct from the park, and the park's distinct from the commons. And there's different ways that we're attacking the same problems. Like, all right, how do we get Bitcoiners in a room to have quality conversations about what we're doing? And I also think it's just great to have these physical spaces for people who are coming through town. It was like New York, Nashville, Austin, Miami's got the Grove now. And it's great to have these places for people who may not be confident enough to inject themselves in a conversation on Twitter or send a DM to basically ask these questions in person.
It's just like a global rallying points, and I agree. The physical community is an important part of any movement, and I always tell people, particularly institutional investors, when I'm trying to actually get them to really understand Bitcoin, aside from how it works and what its properties are and its value propositions, is like you have to understand, like, this is a global movement. Like, you can own it as a financial asset if you choose, certainly, right? And I think there's upside there, but like, we're out here, like, and that number of people is growing, and it's grown so big now that multiple of these are being supported in multiple cities.
Yeah.
It's not just meetup.com anymore. It's literal nice physical spaces with conferences.
Nashville has a whole goddamn campus.
It's huge.
It feels small.
I love that place, dude. Hey, are you excited for, what are your thoughts on Bitcoin 24 moving from Miami to Nashville?
Well, we were just down there at the end of July. It was very humid.
Hot.
It was hot. Yeah. No, I'm excited though. Like, I think
Yeah.
Miami had its run.
It was good.
Fun.
It was.
But like hopping from South Beach to Brickell, like all over, I think.
Well, I agree with. I finally, this last time, made the point to really just stay in South Beach pretty much the whole time.
Yeah.
Previously, like, remember when it was in what's it called, the like art that
yeah, it was in Brickell. I forget what it was called.
Yeah, I forget what's that. Wynwood. It was in Wynwood. It was Mana Contemporary in Wynwood, which is like this like warehouse district. In 2021, I think it was the first conference, like, globally that was like remotely of that size. Remember, they were writing all those stories about it was
people were like
super
8 hours in line.
Yeah, and it was so hot, and also kind of, and then you're like, oh, let's go out to South Beach, and you're like, that's a 45-minute drive from here. Nashville, very different vibe. Not, you go down Collins Ave in South Beach, and it's just like hotel. Every single one with a pool and a back bar. Nashville, I mean, we're going to take over that Broadway scene down there.
Broadway. I'm excited to go to Santa's Pub.
Is that going to be Pub Key Nashville? Santa's Pub?
No, he nixed me on that.
No announcements yet.
No announcements. All right. We had a good time at Max Club Deuce as like Pub Key South Beach. It was good. Pub Key pop up. Do you think that this is going to drive? Are these spaces going to be able to bring in net new people, or is it going to be more of like our community club for Bitcoiners that already exist?
I think it'll be a combination of both. Thomas and I were talking about this earlier. Like, as Pub Key expands, I think one thing about having Pub Key here right off of Washington Square Park is that it's right near NYU. And then similarly at the park, it's right between Belmont and Vanderbilt. Yep. And then in Austin, obviously, we're by UT. And in each place, like, I think the net new entrants to Bitcoin are the university students that are like coming like, what the hell's going on here? Or come to an event to get free food and maybe sneak a beer in. But yeah, I think it's predominantly, if we're being honest with ourselves, like Bitcoiners, like aggregate.
Well, you learn about Bitcoin maybe elsewhere, and then you got a place to go. I mean, I see people come to PubKey that aren't even just like the bar. The food's really good.
I mean that's part of PubKey's strategy too. Is like have Bitcoin.
What does it say? Down on your dealt an unplayable hand. Try your luck here is one of the slogans because the 7-2 is the logo. So what about, I want to ask you about some of the Bitcoin dev stuff, specifically these various proposals for like a future soft fork or upgrade, regardless of whether, so you got OpCTV, you got OpVault, you got APO, I guess you got drive chains, right? You got all of which have BIPs, right? I think all of those have pretty fleshed out proposals. Maybe I know there's others that have proposals too, but those are the ones I feel like people are talking about a lot. Do you have any? I mean, I guess on APO, Vault, CTV, and Vault, which all do similar types of things. Like, do you have a preference, or do you have a what between them?
I like OpVault in the sense that's very hyper focused. It takes what OpCTV, so check template verify, is trying to do and really narrowing it down to one particular use case, which is like vaulting functionality.
Yeah,
like spending conditions over time. I don't know. Like, I think we learned a lot of lessons around Taproot. Like, ordinals and inscriptions were something that many people didn't foresee coming to market once that got activated, and that was driven by a combination of SegWit and Taproot. APO seems like it's going to be very important to scale the Lightning Network. So, just off the bat, that seems very intriguing to me. I think the more important conversation is, do we batch a bunch of these upgrades at once and just try to have a long discussion and talk about the trade-offs and test the trades and then get a lot in at once so we don't have to do it multiple times? And then what is the actual activation method? Because that's another thing with Taproot that really that has really ruffled feathers is
speedy trial
and how it was activated. And I think there's a lot of discussion going on. Like, all right, there probably will be another soft fork upgrade at some point in the future. Do we batch a bunch of them together? Do we do them separately? And then on top of that, like, how do we actually activate them?
Right. So, but you like the idea of like vaulted spend, adding a vault functionality. Yeah, I do too.
Yeah, well, but now, like the emergence of Miniscript,
right?
It's like
you don't need it as much as you thought you needed.
Is that good enough?
Right. I there's obviously more that you can do with a new opcode, but Miniscript is sick.
Yeah.
And I mean, when Rob Hamilton, we had Rob on this show. You've talked to Rob had Rob on your stuff, and we know Rob, and the team there, Becca and everybody else are great. But when he showed me like the mock-up version. Now he's got a live like alpha, but he showed me just the mock-up of like the flow of how simple it is, and like shows the output, the actual script output of. It's unbelievably powerful. We've talked about this, so our audience can go and listen to our episode with Rob Hamilton. It was, I think, back in February or March. So I won't go deep into it, but it does bring a lot of what you thought you needed.
Yeah, and that's like the big question we have. Like, Bitcoin is this very important project. It's like, what is the trade-off of activating something else with some unknowns that could introduce something that was unforeseen that maybe does not does not allow Bitcoin to be as successful or scalable or usable as we thought it would be, versus like, all right, what do we have now? And that's what I think Rob does a really good job of doing in terms of bringing to the conversation. It's like, let's work with everything we have right now and see how far we can get. And then down the line, if that's not enough, maybe we start having discussions.
It's very prudent the way he thinks about it. All right, we're running late on time, but let's talk about the presidential election a little bit.
Yeah, well, that's what I was gonna say. Like in terms of like Bitcoin 2024, I think that's one of the interesting themes. Like 2 months before the election, obviously they had a bunch of candidates at 2023. Like, do we have a presidential debate at the?
I mean, it'd be fascinating. Actually, they should. It's in between the two nominating conventions, and I don't recall which order is which. But I would hope that the Republican one is after it, because then you could conceivably have like Vivek and Ron DeSantis, and you could have them there. You really could. And I mean, do you prefer like RFK's Bitcoinerism over Vivek's, or how do you think about Bitcoin in this presidential election?
I'm agnostic because I'm a strong believer that Bitcoin's not. Like the avenue to Bitcoin success isn't through the federal government political process.
Right.
However, I do think it's massively beneficial that it is a campaign talking point and has shifted the Overton window where these politicians are forced to talk about Bitcoin and have thoughts and ideas around it and really think about it and then spread those ideas to others just by talking about it. So like, to me, not going to back any particular sort of Bitcoin stance by one individual presidential candidate, but I think in aggregate, them just being forced to talk about it and shifting the Overton window is massively beneficial.
Yeah. Do you think the federal government or the Federal Reserve ever ends up hodling Bitcoin?
I mean, they already do.
Yeah. Well, they have the Seize Bitcoin.
Yeah, they have the
Silk Roads and
Silk Road, and I believe they have BTCE and Bitfinex.
I think they have the Bitfinex coins from Razzle Khan.
You should give them back.
They should give them back. I actually kind of surprised they haven't already. I don't know enough about it, but I believe they do have Razzle Khan's coins.
Yeah. What's the best rapper of our generation?
Crocodile of Wall Street. Marty, this has been awesome. Thank you so much for coming to Galaxy Brain. It's great to see you here in New York, man.
Alex, thank you for having me. It was a pleasure.
Yeah, absolutely.
That's it for this week's episode of Galaxy Brains. Thanks to our guest Marty Bent from TFTC 1031 Rabbit Hole Recap. And of course to Beimnet Abebe from Galaxy Trading as always. And to Phineas Ellis, our great producer. Thank you, Phineas. And we'll see you next week. Have a safe weekend. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXY Research. See you next week.